Hi there, welcome back to LlamaFinance. Today our topic is going to be on REITs versus business trust. In the previous video, we explained how does a REIT work, but today we're going to look at another kind of business structure that is largely quite similar to that of REIT, but is different from a REIT. And investments is risky when you do not know what you are investing into. So in order for us to invest safely, we have to know what we are getting ourselves into. So the agenda for today is that first we're going to look at what kind of opportunities are out there available on the Singapore Exchange. What are the business trusts and the REITs that we can invest through the Singapore Exchange? We're then going to look at the purpose of business trust and REIT and understand why does certain businesses want to set up their legal structure as a business trust or REIT. And does the legal structure impact you as an investor? Should you invest in the REIT or business trust, or does it even matter at all? So what are REITs and business trusts on the SGX? So basically, if you have not been to the Singapore Exchange website, you can just go on and hop on to sgx.com. Just click on the securities tab over here, and next you click on the price and screeners and click on prices under the securities tab. And over here, there's two sections known as REITs and business trusts. Okay, however, these lists are not exactly 100% accurate as I last checked, because the REITs still carry certain entities that are more towards the business trust. Okay, so you still have to do certain due diligence before you invest into a particular company on SGX. So how do we do so? Okay, later I'll be showing you guys. So over here we can see some examples of REITs and some examples of business trusts. Okay, so some familiar examples to us is first Videvo CD. Okay, this is Solaris, building in Fusionopolis, found near to the one-off MRT. Okay, this is the Marina Bay Financial Center, which you can invest through REITs also. And lastly, this is the Suntec Convention Center, okay, known as the Suntec REIT. And what are the business trust opportunities we have on SGX? So over here, this is Netlink. Okay, if you have not seen this before, this is basically the entity that owns all the underground fiber broadband. Okay, so if you have broadband service at your home, you are already using the service of Netlink. And next, over here, this is a ship, and this is one of the ships from the first ship lease. So basically, business trust, right? You can also invest into ships through all these business trusts listed on the Singapore Exchange. And the bottom example is actually a pretty popular hotel in Singapore. This is M Hotel Singapore, which is a chic and contemporary hotel found in Singapore. I know that most teens do celebrate their birthday at M Hotel. Okay, however, because this currently in the COVID crisis, so it's not really advisable to invest into the hospitality sector right now. So how do we identify whether an entity is a REIT or business trust? So over here, this is actually an extract from the Ascendas India Trust annual report. And often we are familiar with the balance sheet and income statement. And this corporate information can be found after all this balance sheet and income statement section. And as you read over here, you can see that it labels the trust was registered as a business trust. So over here, you can see very clearly what kind of legal structure this business is being set up as. Okay, so this is an example for Ascendas India Trust. And now let us look at the example for Ascendas REIT. Okay, it states over here that it is a Singapore domiciled real estate investment trust. Okay, so once again, okay, in the annual report found at a similar place as compared to Ascendas India Trust, we know that this entity is being set up as a REIT. Okay. So today we're going to use Ascendas India Trust and Ascendas REIT to show you and explain to you the key differences of a business trust and REIT. So why does business want to set themselves up as a business trust? Because first, business trust is largely similar to any other normal companies listed on the Singapore Exchange. They have this freedom to engage in any kind of business activities. Okay, like what we have seen, like you can own assets such as underground fiber broadband wires, you can own ships, you can own hotels or even golf courses. The next point is that they have less regulations and statutory limits as compared to REIT. Basically, REITs have this limit called the gearing limit, where they can only loan up to 50% of the total assets they have. Right now, because REITs have this gearing limit, and right now because COVID, the government has recently raised the gearing limit to 50%, and this means that they can only have debts amounting to only 50% of the total assets. And thirdly, business trusts are allowed to retain more cash because they do not have this mandatory requirement like REITs to pay out at least 90% of the taxable income. And fourthly, similar to the first point, they can own varied assets. They can own ships, they can own network fiber, etc. Okay, there's really no control or regulations to what they can hold. So why do companies want to exist as REIT? So first, tax benefits. Distributions are not taxed at the corporate tax rate, and I will show you more on why this is so later on. REITs, the main function is to hold properties, so they have this mandate to hold at least 75% of the assets as properties, and these properties are to generate income. And they also to pay out 90% of the income, and this can be a positive cash flow to all the shareholders, including the sponsors also, because sponsors of REITs often carry a certain stake in the REIT itself also. Fourth, REITs have this trustee, as seen in the previous video, and this trustee's job is to look after the interests of all the shareholders. Because this trustee is a neutral party, so they are there to really look after the rights of all the unit holders. And next, I feel that REITs exist to really benefit not only the shareholders but also the sponsor, because managers of REITs and property managers earn a fee for the REIT itself, and more often than not, all these managers and property managers are also owned by the sponsor. So in a way, when these managers and property managers earn a fee from the REIT, they do benefit the sponsor also. So REITs also have access to capital markets, so basically they can raise funds from capital markets through shares issuance, can issue rights or certain warrants, and with all these extra funds being raised from capital markets, they can then expand their business, or they can buy more properties within the portfolio. So what are the impact to investors? Okay, so just now we spoke about tax benefits that REITs enjoy, right? So we're going to compare the tax that is being paid out of Ascendas India, being a representative of Business Trust, and also use this amount compared to that of Ascendas REIT. So over here you see that the income tax expenses, from the income statement of Ascendas India Trust 2019, okay, they actually paid out $73.28 million as tax expenses. However, this is an expense and it's not accurate how much they really paid out. Okay, so let us use the data from the cash flow statement of both Ascendas India and Ascendas REIT. So over here, once again, remember that Ascendas India Trust is a property trust that is almost 8 times smaller than that of Ascendas REIT. And over here you see that in 2018, they actually paid out $25.4 million worth of income tax. And 9 months ended 2019, they actually paid out $90 million worth of income tax. Okay, this is very significant as compared to Ascendas REIT, because for Ascendas REIT, in 2018, they only paid out $5.7 million SGD, almost 5 times less than that of Ascendas India Trust. 9 months ended 31st December 2019, they actually paid out $3.6 million. So you can see over here, Ascendas REIT is almost 8 times bigger than that of India Trust in terms of size, and they are paying way lower amount of income tax. Okay, this is one unique feature of REITs versus Business Trust. So basically, just now what we have seen, the figures are actually plugged out from the cash flow statement of the respective trust. So over here, Ascendas India Trust, see that in 2019 they paid out $18.9 million. However, over here, 9 months ended 2019, they paid out $2.6 million for income tax, for Ascendas REIT. And another thing about the impact to investors is that we can see about the business activities of the respective trusts. So over here, Ascendas India Trust, let's scrutinize the corporate profile. So over here, you can read that Ascendas India Trust may also develop and acquire land or uncompleted developments primarily to be used as business space. Okay, business space basically is a general term for property space. Okay, it can be used for commercial, industrial, or logistics purposes, and with the objective of holding the properties upon completion. Okay, over here it shows that Ascendas India Trust can also play the role of a developer or play the role of buying land and enjoying the capital gains or whatnot. However, for Ascendas REIT, right, the business profile is quite brief. Okay, it says that to invest in the diverse portfolio of properties and property-related assets, and the mission is to deliver predictable distributions. Okay, so they are a more plain kind of business. Okay, the job is just to hold properties and get the rental. However, you can see that it's more made to the description of the business activities of Ascendas India Trust. However, this is a pretty easy example because Ascendas India Trust is a property trust, and they have voluntarily adopted like REIT-like regulations. Okay, they volunteered to follow all these REIT regulations, and similar to REIT, they invest at least 75% of the trust property in real estate. Okay, they have this development limit at 20%, meaning on the balance sheet, okay, the value of the properties under development cannot exceed 20% than that of the assets. Okay, and they volunteer to distribute 90% of the income, and they also set a voluntary gearing limit at 45%. So just now I mentioned that business trusts are able to retain the earnings. So is this really true? So let's take a look at the balance sheet of Ascendas India Trust and that of Ascendas REIT. So over here, for the balance sheet of Ascendas India Trust, you see that there is a particular section known as retained earnings under the equity part of the balance sheet. And as of 31st December 2009, you see that there's a balance of $660 million. However, when you go to the balance sheet of Ascendas REIT, you don't really see anything, and in fact, it's being combined or amalgamated into the unit holders fund over here. Okay, there's no clear section to tell you how much earnings is being retained by Ascendas REIT. So, okay, let's take a look at the payout ratios. Okay, payout ratio basically means how much of the money they earn are being paid out as dividends. Okay, so look at the left-hand side. Okay, this actually is the information from Morningstar on Ascendas REIT, and the right-hand side, okay, is basically the information on Ascendas REIT. Okay, this blue color section at the bottom shows the payout ratio of Ascendas REIT. Okay, or should I say the dividend payout ratio. So let's take a look at the 5-year average of these both trusts. Okay, the 5-year average dividend payout ratio for Ascendas REIT is 106%. Okay. However, the 5-year average dividend payout ratio for Ascendas India Trust is only at 45%. So I believe this is quite a good evidence to show that the business trust is able to retain more cash from the earnings. Okay, and this cash would then be used to expand the business or to carry out other business activities of the business trust. Okay. However, REIT, they are often more unlikely to retain any cash to expand their business. So over here, okay, is it really true that REIT cannot retain cash? So let's also add on one more example known as the Maple Logistics Trust. Okay, one of the very good REIT listed on the Singapore Exchange. Okay, once again we recap that Ascendas India Trust is almost 8 times smaller than that in size as compared to Ascendas REIT. Okay, Maple Logistics Trust has a market cap size of close to $7 billion. Okay, so I've actually taken from the balance sheet, and as at 31st December 2019, you can see that Ascendas India owns about, okay, if we add the money market fund to the cash balance, is about $100 million in cash and cash equivalents. Okay, And Ascendas REIT, being 8 times bigger than Ascendas India Trust, carries only $95.7 million in cash and cash equivalents. Oh, and in fact, for Maple Logistics Trust, they carry way lower amount of cash, okay, compared to these two other entities. Okay, and interesting thing you see over here is that business trusts, they are also allowed to carry like market money funds, but this is not really seen in the balance sheet of REITs. Okay, that's why I mentioned business trusts really have more flexibility in terms of the way they carry out the business. And let's try to take a look at liquid assets, okay, meaning how much cash and cash equivalents do they carry as percentage of the total assets. Okay, so over here we have the total assets of the 3 respective trusts, and if we divide the amount of cash and cash equivalents by the total assets, we then get the proportion of liquid assets they have as a percentage of the total assets. So over here, clearly Ascendas India Trust is able to retain more cash within this business because it has a highest ratio of 3.84%. Okay, they carry 3.84% of cash in proportion to total assets of the business. However, for Ascendas REIT and Maple Logistics Trust, they carry only 0.7% of cash and 0.3% of cash in proportion to the total assets of the respective trusts. Okay, clearly Ascendas India has more cash for the business. And another interesting thing about, I want to point out about the difference between the business trust and the REIT is that the stakeholders are largely the same. Okay, you see all these blue arrows. Okay, it actually shows that these are the similar stakeholders between a business trust and a REIT. Okay, this is the business trust over here and this is the REIT over here. However, the key difference over here is C. Okay, this is Ascendas Property Fund Trustee Private Limited, and this is known as the trustee manager of this property trust. However, over here for Ascendas REIT, we can see that this is the manager, Ascendas Funds Management S Limited. Okay, and the job is to really set a strategic direction for the REIT, to acquire or divest all the properties for the REIT. And over here, there's a HSBC Institutional Trust Services Singapore Limited, known as the trustee. Okay, so basically, as I mentioned, REIT, they do have this neutral party, or known as trustee, to act on behalf of the unit holders, to look after the rights of the unit holders. However, for that of a business trust, this Ascendas entity acts both as the trustee and the manager. So in summary, there's really not too much difference between that of a business trust and REIT, because after all, no matter what kind of stakeholders they have, they still have to act according to the trust deed. And we also see that Ascendas India do experience more freedom because they can hold more cash within the business, and they can also hold certain other kinds of financial instruments like money market funds. Okay, they also can have more development pipelines. Okay, so over here, this is the development pipeline for Ascendas REIT. Okay, it's just one building, which is the build-to-suit business park development for Grab. Okay, over here, and it's worth about $181 million. However, if you look at the Ascendas India Trust, they are more adventurous in terms of the growth pipeline. Okay, you can see that there are multiple opportunities that's concurrent. Okay, they are aiming to build all these different properties and add on all these properties as part of the portfolio of this business trust, as compared to just one opportunity for Ascendas REIT. So be it REITs or business trust, I feel that if the management of the business is good and it allows us to invest further into properties, then why not? Okay, personally, I'm an investor of Ascendas India Trust because I believe in the management, and I really believe in the way they voluntarily treat themselves as a REIT, by distributing 90% of the income, by limiting the development limit to 20% of the total assets. That's why I believe in Ascendas India Trust. I believe that Ascendas is a good sponsor. So why not? Even though it's a business trust, it's paying more income tax. However, it does allow me to capture the opportunities of India, as the next growth center in the world. So once again, we come to the end of this video. I'd like to really give thanks to all these websites for helping in the creation of this video. So if you feel that this video has helped you or taught you something, just remember to like this video and subscribe to our channel for future REITs video coming up. And in future, I was going to share more on what kind of REITs opportunity there is out there, like retail sector, hospitality sector, when to buy and sell REITs and how to value REITs. And if you feel that you know anyone or friends that want to learn about REITs investing, please also help to share this video with them out there.